Hey everyone, Vish here and welcome back to Real Estate Wisdom with Vish. Last week we talked about mortgage renewal shock and how higher payments are squeezing homeowners. Today we are going one layer deeper into something most people feel but almost nobody talks about publicly. I'm calling it the GTA investor trap. The quiet wave of struggling landlords and investors who are barely holding on and in some cases going bankrupt. If you are a buyer, this could mean real opportunity. If you're a seller or landlord, this might be the wake-up call you need. My goal is not to scare you, but to be honest about what I'm seeing on the ground so you can make smarter decisions. Before we dive in, if you enjoy straight talk about GTA real estate without the hype, make sure you follow the show and share this episode with a friend who owns or wants to own a property in the GTA. Let's start with what I mean by the investor trap. Over the last 5 to 10 years, a lot of people jumped into real estate investing with three big assumptions. Number one, prices always go up. Number two, rents will always cover the mortgage or close enough. Number three, if things get tight, they can always sell quickly for a profit. For a long time, that was actually true. Ultra low interest rates made almost any purchase look smart on paper. But now we have a completely different environment. We have higher interest rates. We have softer rental markets in some pockets. Tenants have more options in certain buildings and neighborhoods, and buyers are way more cautious. The trap is this: a lot of investors are sitting on properties that no longer cash flow. Their payments have jumped and they are emotionally attached to the idea that real estate never loses. On the outside, it might look calm. Behind the scenes, some are borrowing from lines of credit, juggling payments, or considering selling at a price they never thought they had accept. I'm not talking about one or two people. I'm talking about a whole segment of the market that's under quite stress. Let me paint a few realistic scenarios I see over and over again. I'll change details to protect privacy, but the patterns are very real. Story number one, the pre-con investor. A few years ago, an investor buys a pre-construction condo in the GTA. At the time, the numbers worked. Rates were low. There was pre-construction hype. Everyone was saying, you can't lose with the Toronto condo. People were like buying it like they're buying a hot cake. Fast forward to today, the unit registers the mortgage qualifiers at a much higher rate than expected. Rent is strong, but not strong enough to cover the mortgage, condo fees, taxes, and utilities. On paper, their net monthly cash flow is negative. Maybe negative $500 to $1,000 per month. At first, they say it's okay. It's long term. I can cover it. But after 12 to 18 months of that, plus rising cost of living, plus maybe a job change or family expenses, now they are in a place where they are asking, do I sell and lock in a small gain, or do I keep bleeding and hope the market bails me out again? That conflict is the investor trap. Story number 2, the accidental landlord. Someone upgrades their home but decides to keep the old condo or townhouse as a rental, thinking, I will rent it out, it will pay for itself, and I will build equity. Then renewal hits. Their payment jumps a few $100s per month. Their new primary home is also more expensive. They are stressed. Now, a single vacancy or a bad tenant suddenly becomes a serious financial problem. They never really saw themselves as an investor. They just thought it was a smart move. But the math doesn't care about labels. The property either supports their life or it drains it. Story number 3, the over-leveraged portfolio. This is the more aggressive investor who bought multiple properties using high leverage. When the market was climbing, that looked genius. But now, if rents flatten or soften, if one property sits vacant or they run into tenant issues they can't resolve quickly, the whole house of cards starts to wobble. That's when you see people quietly exploring things like forced sales, private lending, or even talking to insolvency professionals. I'm not saying every investor is in trouble, but there's definitely a group that is, and we need to talk about it honestly. So, why don't we hear more about this? Simple. Investors don't want to admit they are struggling. Industry professionals don't like talking about distress. And social media still loves the I have made huge money in real estate storyline. It's hard to post on Instagram, hey, I'm losing $800 a month on this property, but I am too stubborn to sell. There's also a bit of shame and fear. People worry that if they admit things are tight, their tenants will take advantage. Their banker will worry. And their friends and family will say, I told you so. On top of that, there's a strong narrative in Canada that real estate is untouchable. Not anymore. Just hold, it always comes back. And yes, long-term real estate has been incredibly resilient. I'm a big believer in property as a wealth building tool. But that doesn't mean every property bought at any price with any level of debt is guaranteed to be a good move. Sometimes the bravest, smartest decisions is to admit the numbers don't work anymore and pivot before you are in real trouble. Let's flip the lens now and talk about buyers. If you are a buyer in the GTA, especially if you are patient and well qualified, this environment might quietly be creating some of the best opportunities you have seen in years. Why? Because stressed investors often show up in the market as properties that have been sitting a bit too long, listings with multiple price reductions, vacant units that used to be rented, or must sell language between the lines. Now, I'm not saying you should try to exploit people who are in trouble, but I'm saying you don't need to overpay. As a buyer, you can be selective about units with real long-term potential. You can look for properties where the seller's motivation is genuine, not invented. And you can negotiate firmly but respectfully. A few practical tips if you are buying in this environment. First, ask smart questions. How long has the property been vacant? Why is the seller moving on? Has the property been cash flow positive or negative? Second, look beyond the staging Staging can hide emotional stress, but it can't hide condo fees. It can't hide property tax bills, and it can't hide actual rental history. Third, have your financing ready. Straight sellers often value certainty just as much as price. A clean offer with fewer conditions when appropriate and safe can carry a lot of weight. Fourth, think long term. If you buy a property that works at today's interest rates and today's rents, any future improvement is upside. You want to avoid stepping into someone else's trap without a plan. But you also don't need to be afraid of every listing owned by an investor. The key is to run your own numbers, not just trust the listing story. Now, if you are listening as a seller or landlord, especially an investor, this is the part I really want you to lean into. This is the uncomfortable question. Are you actually investing, or are you silently subsidizing a property you don't even like anymore? Here are a few signs you might be caught in the investor trap. Your negative cash flow every month and hoping something changes. You get anxious every time interest rates or new policies are in the news. You are avoiding opening bills or statements. You feel stuck but don't really know your options. If that's you, you are not alone. And you are not a failure. But this is where you need clarity, not wishful thinking. A few steps I walk clients through. Number one, get brutally honest about the numbers. What is your true monthly cost? Mortgage, taxes, insurance, condo fees, maintenance, and a realistic vacancy allowance. What is your realistic rent? Not best case rent if I get a unicorn tenant. Number two, stress test the next 1 to 3 years. What happens at your next renewal? What if rents dip a bit or stay flat? What if you have 1 or 2 months of vacancy? Number three, decide if this property fits your real life. Does it move you closer to your long-term goals? Or is it keeping you up at night? Sometimes the right move is to hold and restructure. Refinance wisely, improve the unit, adjust your tenant profile, and lease strategy. Other times, the right move is to sell intentionally before you are forced to. There's a huge difference between selling with a plan while you still have options and selling under pressure after months of stress and missed payments. And if you are unsure, sit down with someone who will actually show you the math and scenarios, not just tell you what you want to hear. Whether you are a buyer, seller, or landlord, there are a few big takeaways I want you to walk away with. First, real estate is powerful, but it's not magic. The math matters, cash flow, debt levels, and your personal situation matter just as much as the market. Second, don't be afraid of the truth. Avoiding your numbers doesn't protect you. Looking at them clearly, even if it's uncomfortable, gives you control. Third, if you are buying, buy with today's reality in mind. Don't build a plan that only works if everything goes perfectly. Build a plan that works even if things get a bit bumpy. Fourth, if you are a landlord in pain, you are not alone. There are options. Before bankruptcy, before panic, downsizing, restructuring, selling one property to protect the others, these can all be smart moves, not signs of defeat. And finally, talk to professionals who are willing to be honest with you, even if it's not what you were hoping to hear. That might be a realtor, a mortgage broker, an accountant, or a combination of those. If this episode hit a nerve for you in a good way or a painful way, that's exactly why I wanted to record it. We can solve problems we are not willing to name. And in the GTA, right now, the investor trap is very real for a lot of people. If you are a buyer who wants to move carefully and maybe take advantage of some of these situations without being predatory, reach out. If you're a landlord or investor who feels like you are on the edge, please don't wait until it's an emergency. Send me a message with the word trap and we can quietly look at your numbers and options together. Before we wrap up, I have a small favor to ask. If this episode gave you clarity, or if you know someone who needs to hear this, please follow the podcast, leave a rating, and share it one friend or family member. Just one. That will do. It helps this show reach more people who are trying to navigate the GTA market with less stress and more confidence. Thanks for listening to Real Estate Wisdom with Vish. I'll catch you in the next episode. Bye for now. Disclaimer. The information provided in this podcast is for informational purpose only and should not be considered as financial or investment advice. Consult with your professional before making any real estate decisions.